Staying on my editorial on Senator Warren, here's a look at the three big tech companies she received money from between 2011 and 2018. On your screens, there you have it, $90,000 there. Reaction now from David Avella, GoPac chair, and also from Ryan Payne, the president of Payne Capital Management. First to you, David. She's getting some support from conservatives to break up big tech. How about you?
She is. Senator Ted Cruz yesterday tweeted his support for at least keeping an eye on privacy, Americans' privacy. And so has she hit on something? She has. But you said something that was critically important in your editorial, which is bad investment. And Elizabeth Warren is a bad investment if you are looking at the 2020 field of Democratic candidates. In a state that is her neighbor, New Hampshire, she's not even coming in the top one or two. And in early states, she needs to get an early victory. And right now, she doesn't have it. And I will contend that she doesn't even make it to the starting line, given the campaign she's running right now. Think about what we've heard in the last 24 hours about people gaming the system at colleges and universities. It only brings back up that Elizabeth Warren tried to game the system at colleges and universities to advance herself. And every time we talk about her career, more questions get asked, and it's why she's a bad investment going into 2020.
Wow, right out the box, strong stuff from Avella. All right, hold on a second, David. Ryan Payne with me. I guess my question is, should the big tech companies, Facebook, Amazon, Google, you think they should be broken up?
No, I think it's a capitalistic society where creative destruction invariably is going to be their downfall at some point in the future. I can't predict when that's going to happen. But because it's such a competitive environment in the U.S., there's always going to be something better that's going to really put those companies on their toes, and it's not going to be government intervention that's going to do that.
What do you got, Liz?
Do you break them up because they censored Elizabeth Warren, right? Or do you break them up because usually you break up a company because they're raising prices with monopolistic behavior? These companies are driving down prices, so much so the Federal Reserve has noted the inflation effect of Amazon.
I think you make a good point.
Yeah.
I'll go back to David for a moment here. The Republicans, I think they've got a real problem with socialism. Millennials and Generation Z people very much attracted to it. So, David, you've got this group, Millennials and Generation Z, they're going to be 37% of the electorate in 2020, the biggest voting group, and they are very favourable towards socialistic ideas, free healthcare from the government, free college. You're a Republican, how do you combat that?
The White House ought to get rid of the daily press briefings and instead have a daily briefing on socialism and bring someone who left a socialistic or communist country and have them talk every day about why they left.
I do that every day.
You do? Well, you can get a little bit of help from the White House and get rid of these daily briefings. We ought to focus on what it really means to live in a country that is a socialistic country or a communistic country. Remember, there were people in China who stood before tanks saying, we want more freedom.
Would you accept that you got a problem with young voters who favor socialism?
Sure, we have to educate folks.
Okay.
Just like, we ought to not allow any congressional codales to go anywhere using a private plane that doesn't go to a communistic or socialistic country. Let's really focus on what life is like in those countries.
Okay, Ryan Payne, I think you're a millennial. You're close to it at the
Close
very
enough.
least. Close enough. Close enough for government work, okay. What do you think? I mean, what do you think about these socialistic ideas that you people have?
Yeah, right. No, I mean, it's a paper tiger. Look, I mean, I work with a lot of millennials. I'm in a lot of millennial entrepreneurial organizations. They're just as capitalistic, if not more capitalistic, than any other generation. In fact, there's more small business owners that are millennials now than baby boomers. So
Is that right?
It's a crazy statistic. So, and I'll say that's the one thing I think binds all Americans. I have the ability, I actually have the privilege of working with baby boomers, Generation X, we're the forgotten generation, and millennials. And I'd say the one thing that binds all of us is everybody is very enterprising in the U.S. It's just the one thing I think is very common amongst all Americans.
It is. All right, It's that time when I have to say, David Avella, thanks for joining us.
Thank you.
I've got to say goodbye to you right now.
Goodbye.
Okay, goodbye. All right, I want to get back to Brian and the stock market. First of all, look at this. We're at the high of the day, I do declare, up 161 points. Boeing is not dragging on the Dow today, far from it. It's actually helping the Dow a little bit. Boeing's up a couple of bucks. But Ryan, let's talk overall market here.
Yes.
One theme on this program for this calendar year has been just seems like the market just wants to go up. And a lot of the economic stuff that's coming out is favorable.
Yes. And that's the thing. I think my thoughts were at the beginning of the year is the old joke is economists and analysts make fortune tellers look good.
Good one.
They never predicted right. And everyone at the beginning of the year was so negative on what earnings were going to look like and what the economic data was going to look like that we're only seeing surprises in the positive, right? The employment numbers came out last week. We have unemployment down to 3.8% again. Wages are going up. And the icing on the cake is inflation is still low. It came in benign yesterday. So you got low inflation and you've got a very, very healthy economy, Stuart.
I just want to break in because we got some indicators, economic indicators today. Construction spending was up very nicely.
1.3% in January,
Solid.
very strong.
For January, that's very solid. Durable goods orders were up. I mean, this fits into your... But you've been telling us for the best part of this year...
Yes.
That, hey, this thing's going up. This market's going up. The economy is growing. Kudos to you because you've been right.
Stuart, I can't argue.
OK, so where to from here? 25.7 on the Dow now. Where to?
Yeah. Well, here's the other thing on top of everything else is valuations are very reasonable. The S&P trades at a forward price-to-earnings ratio of 16 times earnings, or a little bit above that, but that's the historical average. So the equity gods have given this to us on a silver platter. You have to take advantage of this as an investor. It's just like everything is lined up right now.
Extraordinary times, isn't it?
Yes.
A 10-year bull run, and you think it's still going to go up some more. Fascinating, fascinating. Ryan Payne, millennial? Almost, or millennial-esque. Thanks for joining us. That's not bad. We better update.